Okay, hey guys, I want to do a video here for you to kind of take you from the point where you've already qualified your client. What does that mean? From the point where you've gone through the living benefits and the value of critical illness, critical injury, chronic illness, and terminal illness. What that looks like. You've already ran through the questionnaire. Mary, what does life look like if Bob goes to work one day and doesn't see the guy who's texting and driving, runs a red light, bam, hits Bob, puts him out of commission, can't go to work any longer, and now you guys are losing his income. What does that look like? Do you have 6 months of reserves? Do you have something in place that will help you get by for the next 6 months without his income? Okay, that's where critical injury comes into place. Bob, what would happen with Mary if she was to have a heart attack, stroke, cancer over the next 10, 15, 20 years? Unforeseen circumstance. So now you've gone through your question and asking, and at that point, what you want to do now is you want to go through your medical questions, right? So now the carrier that you're going to be thinking about using, Foresters, CFG, Royal Neighbors, whomever that might be that you're using, now you want to go through your medical questions and your prescription history. Once you've made it through that point, then you're going to go to the one of the last transitions, which is the close, showing the 3 options. And I'm going to show you how I do 3 option close for a husband and wife, and also mortgage protection payment close when you're utilizing whole life, not term life. So I'm going to kind of go through 2 different 3 option closes with you. One of the things that I did want to show you, because I went through a script training the other week, was I talked a little bit about aged leads and where to put your notes. And I talked a little bit about where I scribble my notes. So I know it's going to be backwards, but I just wanted to kind of show you what that looks like. Can you see that? So under the person's name, I have all the information that I'm acquiring, whether it be over the telephone or if I just did a cold door knock and now I'm sitting down in front of them and I'm actually going through how much is your mortgage payment every month? Have you had anything major in the past 5 years? Do you have any current life insurance? If you do have insurance, what does that look like? Is it through work? Is it private? And so here's another page, right? Just to kind of give you an idea. Also off my, let me get, not it's too close. So off my door knocks, right? Let me see what this one has. This one has, right? See number 50, Roman, kind of crossed him off the list. Number 7, William, DN, delivery notice, call back March, call Friday schedule for, right? So here's all the notes. And then anybody that I did catch, that I did sit down with, that I did write an application with, here's all their notes. So just wanted to kind of show you that. And then here's the last thing I'll show you is, here's an example of some 3 options. Guys, it doesn't have to be super fancy. It doesn't have to be on the company's letterhead. Just needs to be something that you can show somebody, something tangible that they can take a look at, and you're giving them the options. You're walking them through it. Remember, you want them on your side of the table. What does that mean? You want them agreeing with everything that you're doing, and you've built up enough value in the living benefits, in the fact that they would need mortgage protection, that when you get to the point where you're showing them 3 options, this is a no-brainer. It's just about what fits best in their budget, okay? So, for example, you want to write this down. If you haven't taken notes here so far, definitely start to write this part down. Number 1, rule of thumb is if you're doing a mortgage protection program, you want to start with the full face amount. Now, you don't want to give anybody sticker shock, and that's only going to happen if there's a medical history or if you're a little bit older. A lot of times, if they're going for something that's $250,000 or $300,000 or $350,000 and they're over age 60, boom, that first one's probably going to be well over $150 a month, and you just want to kind of be careful of that, okay? Find out where their budget is. Find out, how much they can actually spend on a monthly basis towards a mortgage protection payment program, okay? And so rule of thumb number 1 is you want to use the full mortgage or get as close to it as you can. So I'll give you an example. Let's take an even number. Let's say their mortgage is $200,000. So if it's $200,000, right? If it's $200,000, then option number 1 is going to be $200K. And that could be, for example, let's just say that's $150 a month. So that would be option number one. Option number two, you always want to take the face amount of their mortgage and cut it in half, 50%. So option number two would be, right, 100,000. Let's just say that's $100 a month. Okay, so now they have two options, and you're going to explain it to them. And I'm going to do it for you, and you're going to explain it to them in the home. Option number three is always mortgage protection payment. Okay, mortgage protection payment. For this purpose, let's say their mortgage payment every month is $1,000 a month. My rule is if you're under age 50, I'm showing you something for 36 months, 3 years. If you're over age 50 or 55, I'm gonna lower it down to 24 months. Okay, and so you would take 1,000, right, times 36 in this case, which would be 36,000, and let's say that's $40 a month. $40 a month. Now what I'll do is I'll do something like, I'm going to show you right here, 36 months, MPP. Can you see that? I know it's backwards. But maybe it's not backwards the way you're looking at it. 36 months mortgage protection payment. Right here, a lot of times I may do 50% and 100%. It really just depends on who you're talking to. If they're an intelligent individual and they're with you during the whole conversation and they get it, a lot of times you don't have to actually write it out. But if you feel like there's somebody who maybe you've lost them along the way, they're a little unsure, and they just need everything spelled out for them, it's always a good idea to show it to them on paper. So I would say, Bob, option number one is to cover your full mortgage, $200,000. That is $150 a month. That covers 100% with all the living benefits. Option number two is 100,000. Now, Bob, what I did there is I basically took your face value of your home and I cut it in half. Why did I do that? Because sometimes it's better to have some rather than none. It's better to be able to pay off all of your interest. And if you're now just getting into the principal, well, you never could have done that before without this option. And then option number three, Bob, is 36,000. How did I come up with that number? That's your actual mortgage payment times 36 months. Mary, what that does for you is if God forbid anything was to ever happen to Bob, you would have, right? And you're looking, if you guys saw what I just did, you're looking at Mary, right? Because why? She's the beneficiary. Or you're looking at Bob. Why? Because he's going to be the beneficiary. What this does is this gives you peace of mind to know that if anything was to ever happen to Bob, in the event of a passing, you would have 3 years of mortgage payments, meaning you would never have to worry that the bank is going to be calling you. You're not going to go into foreclosure. And as you're figuring out how to move on with your life over the next 3 years, do I want to stay in the home? Do I want to sell my home? Maybe you want to fix it up and use it as a rental property. But just understand that this third option gives you peace of mind to know that you'll be able to stay in your home for the next 3 years. Okay? And then I'll say, now, Bob, out of these three options, if we were to do what's called a request for coverage, I'm a field underwriter. I can't give you the AOK here today. I'm here to gather the information. The in-house underwriter for Foresters, they'll be the ones to let us know whether or not this application would get approved. But if we were to do what's called a request for coverage out of the three, which one based on your budget makes the most sense to you? That's one way to do it. You can also go back to if they told you over the telephone, right, while you're doing your script, 2 reasons why people do this. Number one, they do it because they want to make sure that their family has a roof over their head if anything was to happen. Or number two, they're looking for a steady stream of income. And so you can always go back and revert back to that close and use what they told you, whether that's in the home or over the telephone, whatever one they chose. Sometimes they choose both, right? Remember from the phone script. But you can go back and say to them, now remember, based on your intention of wanting to make sure that Mary and the kids continue to have a roof over their head, which one of these options makes the most sense to you? And then let them choose. First one to talk loses. Once they choose one, whichever one that is, I circle it and then I let them know. What I'm going to do now is I'm actually going to do a request for coverage for you. And what I'll ask from you is I need a few things. Number one, I need to know your doctor's name, address, and phone number. And that water pill, the thyroid pill, and the blood pressure medication, I'll need you to grab those for me. Now, and you'll see them actually start to get up, but stop them. No, listen, before you get up, because I don't want to make you have to get up twice. Number two, what I like is your driver's license, please. And then number three is what day of the month works best to have this come out of your account. They give you between the 1st and the 28th. Let's say, right, today's the 13th. Let's say they pick the 28th. Great. What I'll need from you is your account number, your routing number, and the bank name. Okay? They will get up. They'll go get all that when they come back down and sit down. You'll already have your laptop out. You're already starting through iPipeline to put together an application through the carrier's website that you're using. And at this point, when they sit back down, they give you the medications, they give you their driver's license, and now you want to go back to the date that the money's going to be withdrawn. And I ask this question. I say, Bob or Mary, or Bob and Mary, I know that you picked the 28th, today's the 13th. Based on your medical history and my experience of walking through well over 650 living rooms over the past close to 5 years, I know that your application, 99.9%, is going to go through unless there's something that you're not disclosing to me that we're going to find on the MIB report. They go, no, I'm healthy, everything's good, okay, great. Listen, would it be okay for Foresters to activate the program and issue this application the moment it gets approved? Here's why I'm asking that. If they do that, they're going to pull the first premium. Well, that might happen the week of the 21st. And so I want you to understand they're not going to pull two premiums. They're not going to take it out on the 21st and then take it again. They're not going to take it on the 21st and they're not going to take it again on the 28th. What they will do is take it one time on the 21st. This will activate your program. You have instant coverage. And then all subsequent premiums will come out, right? March 28th, April 28th, May 28th, so on and so forth. Are you okay with that? They say yes, great. Then that's how you want to set it up when you fill out the application. You just leave it open-ended when it comes to picking the date. And then you'll have to call the carrier after it's approved and give them a date that you want the premium to come out. If they're specific on a specific date, not everybody is. Some people are like, hey, listen, it's fine if it comes out next week. It can come out tomorrow. And then I don't care when it comes out. Great, then you can just leave it like that. But if they're like very specific, like, hey, listen, it needs to come out on the 1st of the month. We do all of our bills. Make sure you follow up and you make it. And here's why you want to do that, because you don't want their account getting messed up and you getting a telephone call. Here's the second reason why you want to do this. It gets you paid faster. Because if they're not withdrawing, right? So let's say today was the 5th of the month, but they don't want the premium to come out to the 28th. Well, bam, you're not going to get paid till the 29th, the 30th, the 31st. And so this is just another way to make it real. And what I found over the years is the realer it gets, the less likely they are to have buyer's remorse. So bam, the moment it comes out of their account, it's real. They know it's activated and they know that they're going to be getting a policy delivered to them. Okay. So that's one way to do this. Here's the second way to do this. This is all based on you have a client who may not qualify for mortgage protection, meaning term life insurance with living benefits. They're only going to qualify for whole life. And we have a host of carriers that we can use. We can use Columbian Financial. Make sure you do the phone interview ahead of time. You can use Foresters. You have to do a phone interview with the MSI. Okay, so you fill out the medical questionnaire. You fill out the front page of the questionnaire. You get them to sign the application. And then bam, you got to get them on the phone with EMSI, and they're going to go through the medical questions again. So you want to set the tone and let your client know that you're going to get on the phone with the insurance company. They're going to go through the medical questions again with them. They're going to confirm some information, and they're going to ask you if you signed. You want to say yes. So you want to walk them through the process, make it seamless and easy as possible for them. If you decide to go with Transamerica for whole life, no phone interview. Okay, so Royal Neighbors phone interview, CFG phone interview, and Forrester's phone interview, if you're going to go with the whole life part. Okay, now I'm going to show you how to sell in and close whole life masked as mortgage protection payment. Okay, do you remember my third option? Remember my third option, $36,000. What did I do? I took their mortgage payment times 3 years, right? 36 months. You're doing the same thing for all three options. A lot of times, again, it's somebody who's not going to qualify based on medical, or maybe it's somebody that's a little bit older and they're not going to qualify for, like, my rule is I don't want to give a 75-year-old man or woman a 10-year, $100,000 term for $500 a month. I just don't want to do that to them. And I'm going to tell them up front, I'm not comfortable with that. If you're comfortable with it and you want to pay for it, fantastic. Let's do it. But based on my experience, I don't want to put you in a position where you're spending your life savings on life insurance. I'd rather do something that is more practical and makes more sense for you and your family. And so I will then show them, remember, you're coming from a point of view of assistance as a consultant. You're not coming as a salesperson. You're not coming in as a stuffy insurance person, right? You're on their side. They're on your side. So here's how you do this. So as an example, let's say, again, it's $1,000 a month. So option number one, I would show them something for example, maybe it would be 20 months. And that was 20. Hold on. So I'm going to show you. So here's what you would do. You would say, okay, so let's say I'm going to do 20 months. And that was, for example, $100 a month. So, right? So option number one, Mary, this would give you 20 months of mortgage protection payment. Same scenario, peace of mind. Don't have to worry about paying the mortgage. It's going to come every single month. You'll have a mortgage payment, okay? So I would do 20 months. The next one could be, right, 15 months. The next one could be 12 months. And again, illustration purposes only today. Every situation is going to be different. No different than if you're doing straight mortgage protection term. Every situation is going to be different. They're all customized plans. And you're going to have to figure this all out while you're in the home. How do you figure it out? By doing your due diligence, finding out what kind of life insurance they currently have, finding out about their mortgage payment, their medical history, their prescription history, right? Using the guide in the home for the particular carrier that you want to use, and figuring this all out, right? Are their height and weight proportionate? Do they have diabetes and they're overweight, but they're young? Well, they may not qualify, right, for straight mortgage protection. They may qualify for mortgage protection payment. And so a lot of the whole life companies, they'll allow you to go up to $50,000. Well, Brett, what about if their mortgage is $250,000? Well, then you have to have a heart-to-heart conversation with Bob and Mary. You have to let them know, as much as you'd like to see them qualify for the full 250 or the full 200, whatever the number is, they're only going to be eligible based on their age, their medical history, and their prescription history. They will qualify for mortgage protection payment. And here's how it works. And then you explain it. Same thing. If we were to do a request for coverage, which one of these three options makes the most sense? Now, the last thing that I want to do for you is explain to you how to rebuttal when there's an objection. And it can come with mortgage protection payment, or it can come with the straight 3-option close on term life. They are sitting there and they're saying, I just don't know which one to pick. We can't figure it out. I think that we can afford the first one, but I think we're leaning towards the second one. Whether you have 1 day of experience or 5 years experience, whether you've walked through 600 living rooms or this is the first living room you're walking through, I want you to use this phrase. Bob, Mary, based on my experience and meeting with families, would it be okay if I gave you some insight? could I give you some advice? Would you allow me to lead you in the right direction? See what I just did? I'm not telling them what I'm going to do. I'm asking for permission first. I'm allowing them to give me the permission, and then I'm going to walk them through a process where I'm going to show them which option is going to make the most sense. Now, if they can't figure out between three options which one makes the most sense, I will ask, are you more leaning towards option number 2 and option number 3? Or are you more leaning towards option number 1 and option number 2? If they're like, oh, I just can't decide, I don't know which one I want, right? They're just one of those undeciding people. No problem. Here's what I'll do. I will then go with between option 1 and option 2. So if option 1 was, right, 200,000, and option 2 was 100,000, right, half their mortgage, I am going to go back into my calculator on my phone, and I will show them something for 150,000. Something right down center middle lane. And after I've pulled it up, I then will go into my calculator and I will show it to them. And I will literally be like, okay, here's what it is for 150,000. This is in between. Does this make more sense to you? Or were you looking for something closer to like mortgage protection payment, something ultra conservative? I'm giving them two options. I'm not just giving them one option to choose from by pulling it up on my calculator. I'm still giving them two more options. Do you see what I did there? Okay. And so at that point, they're going to make a decision. They're going to go, I'm going to go with the one in the calculator. I'm still going to write it down on the piece of paper. I circle it, and then I go back to my original close. We're going to do a request for coverage. Here's what I need for you to grab for me right now today, and then move on from there. Guys, that is how you do the 3-option close. If for whatever reason you're there with a husband and wife and they're just really undecided, and you can tell that it's maybe a financial issue and they don't want to talk about their finances in front of you, use this one as a last resort. Guys, you obviously are concerned about what this is going to cost, and I can respect that and I understand it. And for doing this for many, many years and working with families, I wouldn't want to get involved in your personal finances. I need to take a call from my wife. I need to take a call from my mom. I need to take a call from this one, from that one. I got to follow up on a call from my manager. Whatever you want to say, I'm going to step out for about 2 or 3 minutes, check my voicemail. If it's urgent, I'll call them back. If not, I'll come back in. And that should give you enough time to talk it through. And then you'll let me know which option makes the most sense. It's language, posture, psychology, all wrapped into one. Folks, this is how you do this close right here, okay? So I hope that was helpful for you. Any questions that you have while you're in the home, please don't hesitate to call me. Please don't hesitate to text me while you're in the home. There's nothing worse than walking out of a home empty-handed because your ego didn't allow you to stop for a minute, let the client know that you want to make sure that you're putting them in the best position possible, and you want to get a third-party expert on the phone to help walk you through it. And then I will get on speakerphone and I will actually help walk your client through the process and get them to do an application for you. All right? So I hope that helps, and everybody have a great week.